If you're scoring at home, the Dow and S&P 500 both closed at new record highs. If you're not scoring at home, maybe try a little bourbon. Investor Beat starts now. Thanks for watching. I'm Chris Hill. Big Ben, I should say, strikes again. In the wake of the Fed chief's latest remarks, the Dow, S&P, and NASDAQ all rising more than 1% today. All 30 of the stocks in the Dow index closing in positive territory. Joining me in studio today, Jason Moser and Isaac Pino. Guys, our top story, shares of Microsoft up nearly 3%. On news that the tech giant is planning a major reorganization. Microsoft will be organized around key functions rather than specific products, and the goal is a better sharing of information, better devices, and better services. Jason, Wall Street seems to like it. Do you?
Hey, everybody likes a little change, right, Chris? I mean, I think we saw this the other day with Barnes & Noble, right? The whole thing with the Nook and Lynch kind of stepping down there. I think regardless of what happened, it's a change. It means that something is in the works. And so I think people have to be at least optimistic about that. It's been a good year for Microsoft so far, 25% up, beating the market. They're making this move from software to devices and services, and I like that too. Now, Ballmer, we know, has had a great relationship with CEO Ford, Alan Mulally, through the years, and hopefully he's taking a few notes from Mulally. I think he probably is, judging from the one Microsoft sort of name there. But yeah, I think it's a good move.
And yet, the company has nearly 100,000 employees. Even if this is a good move, this is going to take a little while to implement, isn't it?
It is. It's a massive tech company. And, you know, we talked about Ford earlier and how it kind of mimics the idea of streamlining the company so it's simpler, more focused on what they do well. And, you know, I must say we'd throw in Apple into the mix. A book came out last year. It was called Insanely Simple, The Obsession That Drives Apple's Success. So you might think that maybe he just went out, grabbed that book, and decided, all right, we're going to go for this. It seems to be working.
Shares of Microsoft at a 5-year high. What do you think of the stock?
You know, I have a hard time betting against Microsoft. It generates so much cash. But, you know, reading through this release, this thing tells us a lot about the what, but not necessarily the how. Ballmer is going to really get these initiatives going. So I guess the fail-safe there is if they hire Alan Mulally as CEO, then maybe I could get behind the stock. But as it stands, there are better places to look.
All right, let's get to some of the day's movers and shakers. Yum Brands down after second quarter profits fell 16%. Sales in China continue to drop in the wake of the recent outbreak of bird flu. And Isaac, this is one of those things that maybe they've solved the problem, but the perception still seems to linger.
Right, and that's going to be something that management needs to focus on, is actually convincing consumers that, hey, Yum Brands is actually on top of its supply chain. They know exactly what's being delivered to the customers in markets all over the world, but especially China and India. And you look at China and India, very important markets, and China specifically is the one where they've had some hiccups. And you know, not only are sales declining, and a 10% dropping in sales is actually a relief after recent months, but you're seeing profitability that's nowhere near what the chain experiences in the U.S. So somewhere around 10% in recent quarters on restaurant margins compared to the U.S. where it's around 20%. So if you're really looking at the stock, you have to think about China, and right now things aren't looking too great.
Amazon closing just shy of $300 a share as e-commerce sales continue to rise. This seems like one of those situations where rising tide lifts all boats, and Amazon has the biggest boat.
Well, Chris, as an Amazon shareholder, let me just say that I'm as giddy as a schoolgirl over this, all right? I mean, it's been a great year so far. Channel Advisor brought out some really good sales numbers. Apparently, e-commerce is catching on, and we know that's Amazon's bread and butter. A lot of people look at Amazon as this company that just doesn't like to make any money. I think that's the wrong way to look at it. You know, Jeff Bezos has said time and time again, he's interested in making money when people use their devices, not when people buy their devices. He's creating these longer lasting relationships that I think will carry on for generations to come, judging from my kids' behavior. I love the stock. I love where the company's headed. I'm still a buyer at these prices.
Costco up after the company reported same-store sales in June rose 6%. This is one of those stocks, Isaac, it never really looks cheap, but they just seem to execute quarter after quarter.
Yeah, and I think because it never looks cheap, it actually might always be a decent time to add it to your portfolio. You know, it's just, Business Week came out with an article about a week ago that was called Costco, the cheapest, happiest company in the world. It was on the front cover. They also included in a earlier version of that front cover, the dullest company in the world. And so it really is like one of the dullest companies out there. But if you're an investor, you're familiar with the stock, they continue to do the things that really make them outperform against competitors, paying their employees well, promoting from within, and just knowing how to run a retail business.
And finally, Wal-Mart was planning to open 3 locations in Washington, D.C., but after the city council just voted to raise the minimum wage, the retail giant is scrapping those plans. Shares up. Investors seem to approve of pulling out of D.C.
Well, it sounded like they greased a few palms trying to get into D.C. and this sort of change of heart here. I mean, 50% above the minimum wage, I think, is pretty significant, and it was based on the size of the company. So you can say that Walmart had a bit of a target on its back here. But at the end of the day, this is going to make some people happy. It's going to make some people not happy. I mean, who knows who's right here? But there's no question that this is really just a drop in the bucket for Walmart. It doesn't affect them at all. I think the residents of D.C., yeah, it probably is going to affect them a little bit more. I don't think Walmart suffers from this one bit.
All right, that is going to do it for Thursday. Let's look ahead to the rest of the week. Isaac, what's a stock you've got on your radar?
So I'm going to be watching Intel, ticker symbol INTC. Intel reports next Wednesday. This is a company that has a new CEO going through the first earnings call. Actually already made an acquisition as CEO. It'll be just interesting to watch to see how he discusses their approach to mobile and the new Haswell chips that are coming out pretty soon.
Okay. Jason, what about you?
Yeah, Yahoo has earnings coming out on Tuesday. This has just become a really fun company to follow with what Marissa Mayer has done to date and what she continues to do. She's gone on a shopping spree here recently, bought a little acquisitions, the Tumblr one, which is now official. That's this quest for mobile and for personalized service. I like where they're headed, and I'll just be interested to hear what they have to say on Tuesday.
Okay. For Jason Moser and Isaac Pino, I'm Chris Hill. Thanks for watching. We'll see you tomorrow.
People on the show may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations